President Trump has just bombed Iran. Iran has now responded with missile strikes on U.S. bases. You guys were on the brink of war. There's a lot of unknowns, but in this video, I want to help you have three less. Number one, what happens to mortgage rates during times of war, home prices, and lastly, your dream of buying a home. Good to go? Because when the world gets unstable, markets move fast. And this movement can be an opportunity or it can shut the door completely. So let's start with mortgage rates, but first, how do I know all of this? I'm Vercellino, USMC vet. I've helped over 2,000 men and women across this great nation utilize their VA home loan benefit. What are MBS and why do they matter? So to understand what causes mortgage rates to move during times of war, we need to understand something called MBS. Mortgage-backed securities are bundles of home loans that are sold to investors. These loans are backed by Fannie Mae, Freddie Mac, VA, and FHA. Investors consider them safe, especially in uncertain times. When fear takes over, investors pull money out of stocks and park it into safer places like U.S. Treasury bonds and mortgage-backed securities. This rush of demand pushes MBS prices up, and as a result, mortgage rates, they go lower. So when war breaks out, mortgage rates oftentimes drop as a result. But that's not always the end of the story. What history tells us. Obviously, we've seen this play out before, multiple times. During the Gulf War in 1990, rates briefly rose above 10%, then they dropped and the Fed slashed rates. Even in 2022, during the Russia-Ukraine war, rates dropped from 3.89 to 3.76 in just 1 week. In each case, conflict triggered fear, fear triggered demand for MBS, and mortgage interest rates dropped, at least for a little while. The inflation wild card. There's a flip side. War doesn't just shake markets. It can also spike inflation, especially when there's oil involved. Right now, Iran's parliament is discussing closing the Strait of Hormuz, a narrow waterway that carries over 20% of the world's oil supply. If that gets blocked, even temporarily, global prices could skyrocket overnight. And when fuel costs go up, so does the price of shipping, goods, construction. When inflation rises, the Fed steps in to cool it down by raising interest rates. When that happens, mortgage rates can shoot up quickly. 2025, we watched mortgage rates climb from 2.7 all the way to 7%, crushing affordability in freezing markets. So even if war drops rates temporarily, inflation erases that advantage before we can even lock it in. The inventory housing trap. This is where the real trap lies. Housing inventory, it's back to pre-pandemic levels, which sounds like a return to normal. But if mortgage rates drop because of war or fear, buyers could flood back into the market fast. If sellers hold off due to global uncertainty, we could see or experience another supply shock where demand spikes and supply dries up. That's when bidding wars return. Prices climb quickly and buyers who thought they had time could get priced out. So just because inventory looks stable now doesn't mean it'll always stay that way. This market can flip at the drop of a dime. So what to do about it? What does all of this mean for you? If you're a veteran or active duty planning to use a VA loan, you've got to be ready. Watch inflation and bond yields. Get pre-approved by a mortgage loan originator who specializes in VA loans. Talk to a VA loan expert, and if you'd like to schedule a free 15-minute consult with me, I'll make a link in the description. If global conflict creates volatility, it can also create opportunity, and those who move early win. Those who wait may end up paying later. Feel like this video helped you think more clearly? Hit like, consider subscribing, and share it with somebody who needs to hear it. And if you have questions about buying a home with a VA loan, drop them in the comments. I answer every one of them. Semper Fi.